Hey Forex traders, good morning. It's Tuesday, April 9th, 2019. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's go! Dum dum dum. Hey, welcome to the Forex.Today channel on YouTube. How you doing? Everything good? Today's webinar is sponsored by TradersWay.com. Make sure you thank TradersWay. How? Oh, you visit TradersWay.com, open a demo account, let them know that you are thrilled to have these daily webinars and that they're helping. And when you feel confident in your new developed trading skills, that you will choose Traders Way as your prime broker to your successful Forex trading business. That's how you do it. So thank you very much for being in my life every day. I appreciate you. I understand how difficult this is. I've known some of you guys for days, and I've known some of you guys for over a decade. That's really cool, isn't it? This last non-farm payrolls that I did on Friday was the 13th. The 13th year I've done that one webinar. That's really interesting. It's amazing, actually. So anyways, good to see you. Good to thank you for the loyalty and respect you show me every day. Okay, let me have my espresso. All right, cool. All right, so let's just stay here. We're on the ends. Nice. Okay, so one of the things we've been looking for is trying to confirm or deny a trend, right? We've used various tools recently to identify or attempt to identify trends. One of them is these linear regressions, right? So like Euro Yen, for example, slowly working our way up. Now, it's been maybe a week or something. Let me get my drawing tool. But we've been eyeballing like maybe an early week move to the downside, but more likely, because we've been trying to catch the top of this move, we've been really eyeballing this area for the short. There was kind of one Sunday afternoon if you were hot to go HOTTOGO, but you're hanging out in no man's land, so it's not that likely, but it might, right? So you take the shot and manage the risk. Bulls, a few hours later, they took their choice. Not the world's greatest trade, but a cluster of pivots nonetheless. Now, one of the things we talked about on Sunday afternoon in the swing trading group was that bears actually want to sell up here. And so it's sort of the bulls are by doing their job, they're actually helping the bears do their job. So that's an interesting aspect to trading that I'm fascinated with. For the bears to do their job well, they need the bulls. It's sort of like bees can sting you, but we need bees in our life, right? Amazing, right? So anyways, bulls take it up. So let's go a couple of clicks in. Now we're just sort of, this is a weekly trade plan, up, 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 down, down. Opportunity for a roll reversal. If you weren't a bull before, you can be a bull now here on the roll reversal. Standard price action. Now what we're hoping to see as a bull is up, 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 down, down, buy, up, 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 up. Okay, sort of like this one, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy, up, right? Up, 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 down, down, buy, up, 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 down, down, buy, up, 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 so on and so forth, until we get to the top of the linear regression. Okay. At that point, we know either it's unlikely to continue higher based on how far it is from the mean, or the mean is obviously changed. And that's one reason I don't use these things very often, because they don't really tell you it's going to go up or down. So it's just a form of measuring where your mean is and how far from the mean you are, but the mean can change, right? So there are other things I use, but I think this is an interesting way to illustrate the general direction that we're going. So anyways, up, down. Now, if I remember correctly, on Sunday we were talking about getting here by Wednesday. Okay, setting up next week's trade. I know, right? Make sense? Of course, that's where bulls are supposed to exit, and that's where bears are supposed to enter. La 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 la. So we have a day or two to go yet. So it might be one more bullish run into a bearish move. Cool. Short-term long to long-term short. Nice. Okay. So what's this all about? Well, this, like many of the other trades that are in a similar fashion to this, is that this is a perfect bullish entry. So if you're a bull, you're already in it, and you probably reloaded, and you might have tried again here. Now, almost like the opposite and equal reaction to that is this is a perfect place for a bear to sell. This is where he sold, and this is probably where you'll reload. So what's going to happen this week? Well, that's the bajillion-dollar question, right? And it hasn't really shown us anything. So bulls are still trying this, which is fine. You're going to count this as a bottom. It's your weekly swing zone, so that's great. And bears are selling in here. So it's like one of these things, like if you weren't buying down here or if you weren't selling here, I don't think you really know what's going on trend-wise, and you shouldn't be doing anything now. Okay. Yeah, good point, Azabu, as far as the Wednesday meeting for the euro yen. Yeah. La 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 la. All right, so yeah, lacking of a trend, maybe, right? You can see it was hardcore up, now more sideways than up. Well, gold, oil is risen quite a bit, so that leads you to a bullish trade plan, right? Cool. Where are we going in general for the month? Well, with oil going up, that puts some upward pressure on this pair. It's both good for CAD and good for or a positive sign maybe for macroeconomics, which would be weak in yen. this is, right, the lowest point of the month, which would point us toward M4 on a monthly basis, which is way the heck up here. Okay. Now, last week's entry on swing was right here. So you had a weekly, monthly swing entry. And last week's target was here. Thank God we had that little pink zone drawn for us, right? Great. Now what? Well, if you're a bull because you were a bull here, then, like we said in the swing trading group, well, then if you're going to be a bull again, that's your buy zone there. That's why you need to be at your chart on Sunday afternoon when the market's open. Now, you might say, well, Wayne, it's 3 a.m. for me when the market opens. Yeah, I wish I could cry a tear for you. That's so sad. But that's what you need to do. And the target this week is up here. Now, the interesting part of this target is it's a monthly bullish sell zone. So if bulls exit here, bears might enter here. Okay. So once again, sort of short-term, long to long-term short. Okay. Now, of course, if the bulls are right, you know, they're going to probably buy it back here, and then we're on our way up, and we destroy all the bears, because bears are not going to be selling up here. I mean, they might sell this. So if bulls get their way, like this is how this was the reversal. I don't know if that's your 3 wave or not. I don't know. But maybe there's something like this in us. Okay. Get ready, because this ain't funny. Oh, explain me this. Oh, hello, Wayne. Can you explain me if we are in a bull trend? Oh, you want me to show more of a bearish side? Okay, that's fine. I'm okay with that. Okay, but the reason, like for example, bears were supposed to sell yesterday. So it's kind of silly to talk about it now. Well, you know, bears were supposed to get something like this, right? Yesterday we talked about it. That didn't happen, so it's just like, so it's not bearish anymore, I suppose. If we were down there, then that's what we'd be talking about. Oops, I didn't mean to do that. If we were down here, this is what we'd be talking about. Now, we wouldn't be talking about this, I suppose, right? So it's, right, Luca, I'm not trying to say you should be a bull. I'm just reading the charts, right? So that's why, like, if you ask me to be a bear on this and analyze it, you know, I'm sure I can find something. And the biggest, most likely something having this quick scan, I just did the daily, a 4-hour, and a 1 hour. That took me, what, 2 seconds. The next real bear zone is right here. Okay? So if you're a bear, you're setting this up like this, and you're creating resistance lines, and you're waiting your turn. Yeah, well then ask Luca. Okay? If I put too much of a bias into something, just let me know or ask for the counter bias. Happy to do it. So remember, it's just technical analysis, so it doesn't tell you direction. So if you say bear, I'll say, okay, well, shouldn't be a bear here, but you should maybe consider it a little higher, and then we can set that up. Happy to do it. Okay. So this is much more bearish than the other pairs. Okay. And check this out. As long as we're held down by the 4-hour 21, I don't want to be a bull. So one of the things we were talking about, 36 hours ago? 36 hours ago, we were talking about, up to the 55, down, and then sort of an up this way if you're a bull. And if you're a bear, selling these retracements to the 21, well, the closer you get to here, the less good it is, so to speak, because nobody should make a habit of selling at or near support, no matter how bearish you are. So one of the things we're talking about is, looking for a break, pullback, break. Okay. And even then, that only gets you to here, which is still a little bit dangerous. I think it's amazing that 36 hours has passed and many of these yen pairs haven't done anything. Quite remarkable, actually. What pair, Luca, are you looking at? For example, if we were above the 200 moving average on the 1 hour. So, okay, so let's just clear this out. I think I know what you're saying. Okay. It's a very generic general question, but it's fair. All right. So you're saying if we were above a 200 EMA, okay, well, first of all, the 200 EMA isn't that important, first of all. I have to make that clear. Okay. That was supposed to be, I don't know why it came out arrow. You know what, let me just do it again. I got click wrong button itis today. All right, I'm going to do this again. Okay, now first of all, the 200 EMA is fair market value. So you're like, hey, Wayne, we're above the 200 EMA, so I'm looking for some sort of, 5A cross up? No, actually, no, that's not what the 200 EMA does. That's a fair market value, and you're looking at how far away you are relative to it. So really, it's similar to like a linear regression or a Bollinger Band. The farther away you are for fair market value, the more likely bulls or bears are going to take profit, and it's going to revert back to the mean. Okay? So what I'm actually more interested in is a 55 and a 21. Okay? I'm more interested in that as far as trying to make a decision on direction. So this tells me the market, okay? The market is bullish, and the trend is also bullish. It just shows me where in the, let's say, the maturity cycle of the trend we are. Currently, the market and the trend is bullish. If the market and the trend were not in congruency, then that just tells me to maybe back off, maybe not trade, all that kind of stuff. So how does the 5-8 cross fit in? So to represent that, I'm just going to use a black arrow to represent the 5 and the 8, okay? It's just drawing all these EMAs It's just not the best way of handling it. All right, so when the 5/8 is moving up and all these things are moving up, you're not buying. It's when you retrace back to the 21 and then you get a 5/8 cross up, you buy. Okay? Retrace back to the 21, 5/8 cross up, buy. Retrace back to the 21, 5/8 cross up, buy. Okay? And then at some point it's going to do this. And that tells us to expect a double top, and then a lower low, lower high. And then these moving averages by here would have rolled over and crossed the other way. The other thing to point out is I start my on the 4 hour. All right. So since I'm not sitting here holding your hand, scalping every trade with you, I spend most of my time on the 4 hour and 1 hour. Because what I'm doing is I'm coming up with a strategy. Okay. And then based on the strategy, I'm looking for support or resistance. I guess if I'm going to draw it that way, it should be resistance over support. But anyways, whatever. Okay, and that's 90% of the work. Once you've made a decision on your strategy, and that's simply that you're a bull or a bear, and then you've gone through and you've done your support and resistance. So like if you're a bull, you're looking at monthly pivots, weekly pivots, daily pivots, and all that kind of stuff. And you're looking for pullbacks and all this kind of stuff. Very, very simple stuff. Because if you're a bull, you only buy dips at support. Well, that's easy enough. And then once you've decided where what your prices are, and that's just simply identifying support if you're a bull, you say, okay, I'm buying retracements to support. Great. So you identify what those are. So now you have the exact prices you're interested in buying. And then you drop onto something like a 15-minute or a 5-minute, right? And that's where you're doing your 5/8 crosses up and stuff like that because you're already a bull. So you're waiting for 5/8 crosses, buy that, 5/8 cross up, buy that, 5/8 cross up, buy that. Okay. But you're not doing any of this stuff until you've done your work. So again, strategy first, then price, right? So you can almost say market because what's the strategy? Well, based on the market. What's the market doing? Right? What price are you going to? So you say, in this market, my strategy is to be a buyer at support. Great. What are the prices you're interested in? Where is support? And then lastly, now technical analysis, little 5/8 crosses. And this is all tactical stuff, just buying dips and all that kind of stuff. Super easy. Now, the problem is most people do mostly this, maybe a little bit of this, and very often it works, and then they go through patches where it's not working, and at the end of the month or at the end of the year, they haven't made any money. Well, it's because they lack strategy. Okay, is that helpful, Luca? So like under that context, Luca, look at this. How could I possibly be bearish here, right? We started the month at a bullish pivot, right? Bullish exit, bullish entry. 21 is above the 55. Everything is above the 200, even though that's irrelevant to me. I'll throw that in there. And then on a weekly basis, these bulls bought at the bullish entry. So like at this point, under this circumstance, there's essentially no bearishness. That's why I never mentioned it. I never saw it. It didn't even occur to me to think bearish. There was sort of like if you had to be on Friday or on Monday, there were little tiny entries, but you're out of that by now. But the real exit that we had talked about was this is it. This is where these bulls and maybe these bulls are going to exit. And this is a bearish entry. Okay, so there's a higher probability. So I think what will happen is if we get up here Wednesday or Thursday, there's going to be profit taking, bring us down. We're going to hit this. It's going to be a roll reversal, but it heads back up here. Hit our bearish zone. Not enough bulls actually got in, so they're vulnerable to bears. And then we bring it down like this. But I actually said this 2 or 3 weeks ago. Okay. So I've just trained myself. I don't even see I don't see bearishness at this moment. So I wouldn't talk about it because I didn't see it, so it wouldn't have occurred to me. Now, I'm glad you brought it up because there might be lots of people that are looking to sell this and they don't have my experience, right? So it doesn't work out for them and they're wondering why. You need me to zoom in? Too many bars? I don't know what bars are. Is that easier? Okay. So if we were, like I said before, if we were down here, then we'd be talking bearish stuff. And I'd say, oh, well, let's look at, roll reversal areas and all that kind of stuff. And we'd set this up and down. Okay. Well, yeah, and lack of trend is going to get you into trouble, right? Pharaoh says, it lost on the canyon. Did you buy or did you sell, Pharaoh? If you don't mind me asking. Yeah. So I zoomed in, so there's... Yeah. Well, okay, so you got caught in a little bit of a move. So here's the exit. So really the sell should have occurred on Wednesday. Okay. I can see that you tried something in here. And if it was Sunday afternoon, that's fine. Okay. This is a little tiny sell and a little tiny roll reversal. Yeah, and that's that. Okay. So one thing to point out to everybody, and I'm not sure if I said this in the swing trading group, so it's good that it's occurring to me now, right? How do you say in English? No, I take it back. That's probably why I didn't say it in the group. Yeah, I don't know. Just that's how it turned out. And maybe it is lack of trend, right? So a little trade in there is all right. But what we're looking for as traders is this, right? Big, long trends that are, all this kind of stuff. And we just don't really have that. Certainly not on a bearish side. Okay. Okay. And looking at this, I don't see a lot of conviction for monthly pivots in general. Right? Yeah, so I think you were a little bit of aggressive, and you lost a little bit of money. I mean, yeah, I don't think you did anything wrong, right? I think, yeah, a dip pullback kind of thing would have been better. But yeah, just one of the things I did talk about over the weekend with the swing trading group is this idea of getting caught in mediocre trades. When you look at this right now, do you see a strong conviction for a trend? Okay. I don't see a strong trend here. Are we at hardcore support and resistance? We're stuck in the middle, right? You see what I mean? No, let's talk about that. Simpleton says up. A trend is lower, let's say a downtrend. Lower low, lower high, lower low, lower high, lower low, lower high, right? Lower low. An uptrend is higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? And what we have is high, low, right? So, right? It's just, that's what this linear regression is measuring. So you can see measuring from this point here to yesterday, this is the mean, this is the average price, okay? Here's one standard deviation, and here's a standard deviation to the other side. And it looks pretty sideways to me based on the average price during this time period over 1, 2, 3, 4 weeks. We're in the 5th week. Over the course of 5 weeks, yesterday we were at average. I don't need to go to daytime. Look, if 4 hours isn't enough for you over the course of 5 weeks, okay? The void above. Wow, the void above is looming. I'd rather you say, based on the move on oil, you think that the Canadian dollar is going to benefit, or that you see a sign of positive macroeconomic growth, so therefore yen will probably weaken. I couldn't give 2 hoots about the void above. It's not looming. Okay, this is money crossing borders, right? This is big boy stuff. This is business. Money going from one country to another. No one gives a damn about the looming void. So just be careful, right? What is the business behind your proposition here? So I'd rather you say oil prices are going up, the correlation would show that this goes up, right? No, I know what a vacuum is, but it's just, I know what it is, and I use the vacuum term when it comes to gaps and stuff, which is a very short-term thing, like over an hour. You're saying, hey, bust out a day chart. There's a big vacuum up there, and nature abhors a vacuum. It's going to fill. That's nonsense. That's just gobbledygook stuff. Okay? Auction theory and stuff. No. There's no theory. There's money crossing a border. There's no theory necessary. And I'm sorry, Simpleton. I'm coming across mean and rude. I apologize. I'm going to change my tone. I'm trying to change my tone. There's only business. There's only money. Okay? People buying oil are not looking at the empty void above us. What we need to figure out is simply, will money go to Canada? Okay? That's what we're trying to figure out. So I'd rather you talk about oil prices going up, so it requires more money to buy oil from Canada. That's all. That's all we do as foreign exchange traders. Follow the money. So very often we're asking ourselves, why would the money go to New Zealand? Why would money go to Australia? Why would money go to China? So for example, if we could say the money is going to go to China, a lot of it comes from the United States. So the dollar may weaken. Well, why would the United States be buying lots of stuff from China? Oh, the economy is doing really good. Oh, So what kind of things will the United States need if they're buying from foreigners, right? And all that kind of stuff. So where's the money coming from and where is it going, right? So like I said, I recently visited both a Mercedes car dealership and a BMW car dealership, and they were busy as heck selling cars. Unbelievable, right? And the Mercedes dealership near me is crappy. It's not even a nice one. You got to drive through a ghetto to get through it. It's a nasty, ugly, nasty, filthy Mercedes dealership. And you pull in, they're selling 20 cars a day. Because I talk to everybody, right? So I asked them, how many cars are you guys selling a day? 20. 20 cars. 20 cars worth $100,000, right? They're turning over $2 million a day in cars. Holy crapola. Certainly, right? Certainly 1 million a day. So that money eventually is going to Germany, right? So so that whole idea, that whole process is what is how I trade, right? That's how I trade. We need to answer the economic question, and I just hate these, wives' tales, rules of thumb. It's got to go up there because of vacuum, and the vacuum's got to fill. It's like a book written for children, and the book is parables and little stories, right? They're I think in the long run are not helpful, right? What we should be doing, or of course what I've done, is study economics, and to answer these things, right? See, once again, you're talking so general, simple. Maybe that's why your name's Simpleton. Hey, I didn't make your name Simpleton. You're talking so general, like there's a big void up there, so price has to go to the void. It's such a simpleton view. Now it sounds like I'm being mean again. Well, you named yourself Simpleton, so that's fair. But fundamental traders have such wide stops. You know what? If my stop's more than 30 pips, even then I'm swing trading, right? It's like I'm a fundamental trend trader. You're talking about, and maybe I'm interpreting your point of view as, I have 100 pip stops or 300 pip stops. Sometimes that's true, but generally not. Yeser says, really? How many people? Here, let's do a survey. This is cool. And again, I apologize. I'm coming off rude and mean. I apologize, or at least I feel like I am. I haven't slept a lot lately, and maybe I'm cranky or something. So once again, I'm telling you, I'm sorry. Okay, if I'm coming across rude, I don't mean to be rude. I'm sorry. But let me ask you a question then. How many people feel like my charts are too complicated? Yasser Khan says my charts are too complicated. Okay, this will help me understand how to help. Yeah, don't say no. Don't say no. I want to see how many people say yes. All right, cool. Thank you, Simpleton. Roman says yes. Not a lot. Lots of people, they're fine. Roman says yes. I'm wondering what it is. Like, I have some moving averages. Is it the moving averages? Or is it the pivot points that are throwing you off? Like, for example, I can change, not that one, the other one. I can turn some of these off. And I suppose even that I can slim down a little bit more. Okay, let's do it that way. All right. And we don't need a linear regression. We don't need this, of course. It's just me measuring trend. I think it simplifies things, but if it complicates things, then I'm not being helpful. And of course, this is me in the past identifying support. Okay. Is that still too difficult? Too complicated? That's better? Yeah, I agree with that, Simpleton, and nor am I saying the market sees them. They're tools for me. Yeah. Yeah. Simple is my friend, too. Yeah, if you follow the daily webinar, you're going to learn for sure. But I don't mind. I don't mind just trading with this. This is enough. And then it turns out some people are finding. Oops, I didn't want to do that. Some people are finding the past pivot points too much, huh? So really, if I were to thin this down even further, so I have no moving averages. Delete. All right, that's good. So this is all I need to trade. Are we okay with that? And I can simplify this even further if you want less information. But you have to understand, though, if you understand what these indicators are doing, by me having this additional information, if I need the additional information, I can just look and it's there, right? I don't get analysis paralysis, because I just use what I need in the moment to make a decision, right? So Yasser Khan likes this one better. Okay, that's fine. You're not getting a full picture, but it's enough. Jim says it's difficult to display monthly and weekly. Yeah, so this is where it gets down to what tools you have, right? So for example, more screens can be helpful in this situation, where you could have one chart that only has monthly pivots, one chart that has only daily pivots, right? One chart that only has weekly pivots, and you look at them independently. You can totally do it that way. You can't display it on one screen that way, otherwise you'll be flipping, and you'll miss things almost always. Oops. So you get more screens, which is fine, right? I used to have 18. I've slimmed it down to less than 18 screens. That's cool. Okay, but I look at this and I still see middle of the range. Okay. No, no, I wouldn't look at this and say now it's a bottom. No, that's not a breakout. Okay. You'd need something more like this, but bear in mind there's hardcore sell orders right here. Hardcore. This is a hardcore sell zone. Okay. So you're really going to get yourself into trouble, You're going to have to really let it break, right? So anyways. So if that's all you want to trade with, that's fine. This is enough information. I can see where we're going this week, right? So I can look at this and just like in a second say, well, this is where bulls are going to take profit. And I also know that this is where bears are going to sell. It's either going to be late this week or early next week. There's going to be sells in here most likely. So, yeah, that's all done, right? It's all done now. Well, that's where, well, two things. This is where bulls exit. I know bulls are going to exit there. That's where they take profit. But this is the monthly sell, right? This is the monthly sell price. By definition, this is where bears are going to sell. Okay. You see? So any pivot point swing trader knows that this is where bears are. That's already where they are. They already have trade plans, right? Does that make sense? Roman, I like Asia a lot. I like Asia a lot for trading. If I'm doing like day trades and stuff, very often it's Asia. Hey, Somali FX. Okay. Go to the, let's do oil. Oh, debt? That's, yeah, what more do you need than that, huh? Okay, the reason I bring this up is this is the monthly target. We hit it now. Okay, so as far as I'm concerned, WTI is dead for the month. And that sets up a potential counter trend trade because it's still early in the month. Okay. Okay. So look for it to the 21 and then maybe a little higher and then down to the 55 and then, you know, I'd look for a move, something like that now. But this is done, right? This is a front run. This is actually how the trade, right? Anyone from the swing trading group knows that an out of position trade, so this is out of position. An out of position trade is wait for the retracement back to the 4-hour 21. There it is. It only gave you this much, but it did what it was supposed to do. So the 21 is still in control, which means it's still a very, very, very bullish market, which tells me it's not going to reverse very quickly. It's going to take a lot to reverse this. So we have to give all bulls reasons to get out. Well, this is a very clear bullish entry on a weekly basis. So down to this 4-hour 21, up into this zone, right, which gets us back down into the monthly zone. And by then the 55's caught up, which allows us to do like an inverse head and shoulders and then a larger move down by the end of the month. Yes, this is a monthly pivot profit zone. So back here, right, the projection, this central pivot point front run predicts R2. So we knew March 30th that if the oil market was to stay bullish, okay, then the projected high for the month of April is going to be, 64.5 or something. 64.35. Okay, we knew that 9 days ago. Actually, 12 days ago. Okay. 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 Actually, I wanted this to be Brent. Cause it's you I see in the mirror, and it's you when I pick up the phone. Oops, wrong one. Okay, Brent doing the same thing. Projected highs, look at the entries, same move, different market. Amazing, huh? I suppose there's a slight difference. This looks more like M2, so you might have been thinking, well, maybe M4 here, but it did go to R2. 21 still in control, so it's going to need to break and then pull back and then work its way around. If it's coming down, back to the central. Sometimes you let me keep on your own. Caught on our support, but approaching now our resistance. Okay. Typically, this predicts an M4 if you're trending, but we're not trending. So I think what we're really doing, and I marked this up last week or maybe even the week before, but we're really just in this range for now. Okay. Right. So I'm not actually deploying monthly swings or something on this. As far as I'm concerned, it's just this. Okay, we did that. Euro dollar. Okay. This is a monthly swing. This is the buy zone on Monday. This is the take profit. Okay. So if you've been a bull on euro dollar, you need to take profit. Okay. It's early in the week, right? Is it Monday or Tuesday? I think it's Tuesday. So there's still a reasonable chance by Friday we'll be down here. Sorry. Okay. We would really have to propel ourselves out of this weekly move. Maybe there's some news or something. So to break out of there, you kind of have to do something like this. And you have to ask yourself, are you really that bullish? Well, we have a decent entry here. As you can see, I have it all specced out. Okay. So yeah, you can be. But I'd be cautious. I mean, here's the thing. What do these tools tell us? The tools are not always right. I mean, they're just measuring algorithms, measuring price and time and such. Most times, in a scenario like this, you get profit taken. So maybe if you're really bullish, it's going to do something like that. Okay? And now this is where bears are going to sell. And it looks like they're, right, currently they'll do that next week. So this might actually be, here's how it might work out if you want to try to time this, right? It comes down, and then Thursday it rallies up, and Monday or Tuesday we're at this price, and this is where it starts to come down. Okay. Yeah, Kenneth, we were looking at, I believe on that one, we were looking at a 21 EMA. We can go take a look at that now. Okay. But even that, like, yeah, so there's just a big, giant nothing right now. So analyze the market, identify the support and resistance. Okay. We can put one there, and I suppose you could do here, but then you're getting more and more and more. But nonetheless, farther down is more support, farther up is more resistance. What are we trading now? Like, what's the basis of your trade plan? Does that make sense? Like, what is the basis of what you're doing? Bulls are supposed to buy at support. Bears are supposed to sell at resistance. So where's the support and resistance? Kevin says, and I must be bitchy today because I like Kevin, and Kevin, that makes me get all bitchy too. I'm in a bitchy mood, so I apologize. I don't know what's going on. So he's like, how reliable is stochastics? 100% reliable! Right, Kevin? It's an algorithm. It's not lazy. It's not like it shows up late one day. Right? The thing is, you need to know what it's doing, and you need to know how to trade it. But it's 100% reliable. It's 100% reliable. But like most things, most people don't know the math behind the algorithms that they're using, like a stochastics or a MACD. They don't even know what the math is doing. So how could you possibly use it right? And then from there, they're very often, I think what happens is people are mistaught, right? Some guru teaches you crossover strategies, right, for money, and then you find out it's nonsense. So yeah, they're reliable. I used stochastics very, very, very actively, especially so back in the day. Let's say go back well, before Harvard. So how long have I been at Harvard now? 5 years? 6 years? 5 years? 5 years? I guess I'm in my 5th year now because I wasn't always in my program. So yeah, about 5 years. So let's say 6 or 7 or 8 years ago, I spent a lot more time scalping than I do now. Right? And it's because I had nothing better to do, sit in front of my chart and trade. Now I got schoolwork and stuff, right? So I used stochastics a lot as a scalper. But what I do is no different now than when I was scalping. That's the big aha moment, I think, for people on the long run. I think lots of people trade one way on a 1 minute chart and a different way on a 1 hour chart, and they employ different strategies on these different things, and they get inconsistent results, right? I trade the same way whether it's a 4 hour chart or a 1 minute chart. Now, I might lean a little more on my stochastics on a 1 minute, but if you took away my 4 hour chart, I wouldn't be able to scalp. Right? So the only reason I say I use stochastics more on a scalp is, well, I speed up my stochastics so it represents price action, overbought and oversold conditions for price action, right? You guys know this. There's videos and training courses and books and magazine articles, and like I've fully documented all this, right? So when I'm scalping, I already know the price I want to buy or sell, whatever it is. I know the direction and strategy. I know where everything's lined up. I've already analyzed the 4 hour, 1 hour chart to death. I know what I want to do, right? So now on a 1 minute chart, I might use the stochastic simply to enter a trade and exit a trade, re-enter a trade, exit a trade, so on and so forth. And the stochastics, under my settings, represents overbought and oversold conditions for price. But even then, over time, I use it less because I can already anticipate where the turn's going to be. And I already know what the candles will look like to create the crossover. So therefore, I in my mind, I can see the stochastics cross, right? Because I've seen it 100,000 times. Like, I probably have seen it 100,000 times. So now I can kind of anticipate even before the cross that it's crossing, and then I can take those trades, but only at my price. So long story short, no matter whether I'm scalping, spot trading, swing trading, carry trading, all these different things, I'm going to enter the same way, the same way tactically. And I still try to trade with the same strategy in mind on all time frames. And the entries, like the triggers, are all very much the same. The most important part of any trade is that you're at support or resistance, right? That's the most important thing. And then you can use any oscillator you want or any moving average crossover that you want, and you're going to get the same result, as long as you're at support and resistance. Now, yeah, Roman now brings in, like, with divergence, which is a different use. So what does divergence tell us? Like, for example, you'd see divergence here. You'd see it here on the oscillators. Guess you can't see that. Let me change the color. An oscillator would have divergence here. I don't have an oscillator on the chart, but I know it would create one. Okay. So let's maybe change this. I don't know if this is the right chart to use, but why don't we go here? So what's the first step of using stochastics? No, but see, Kevin, most people that I've seen when I first run into them, they use MACD and stochastics almost interchangeably, and it's because they don't understand what the tools are doing. They don't understand the design of the math. So to them, it's just two squiggly lines, right? And they trade them exactly the same way. which is kind of silly, and you're kind of pointing that out, right? But what is the minimum amount we can place in Forex? Nilesh, I've never had to ask that question, so I don't know. It just makes me think you should probably not trade real money. You should probably come to these free webinars. You should probably save your money. You should probably get a evening and weekend job. Okay? And save until you don't have to ask that question anymore. Meanwhile, you'll develop your skills and all that kind of stuff. And I'm not being facetious and I'm not being mean. I honestly mean it. It's kind of like going to a job interview, and during the job interview, you say, well, what's the least amount of time I can work? And what's the, right? So if you just don't have any money, that's fine. That's okay. I mean, seriously, it's okay. I do these webinars every day for free. There's 4,000 videos associated with my work on YouTube that are for free. There's a couple of like video training courses on YouTube for free. You probably get a cheap hack of my book somewhere, right? And spend the next 3 or 4 years learning Forex without investing any money. Now, compare that with me going to Harvard. You know, once I got accepted in my leader program, it's a 4-year program. Cool. So I signed up for 4 years. Done. So I'm asking you, like, if you're like, don't have any money, let's solve that problem first. And then you probably don't know how to trade Forex, so let's solve that as well. So the first solution is don't spend any money, don't trade any money. Whatever you got, you're not going to turn it into more. You're going to lose whatever you invest. I can just tell. So don't worry about it. So in the week, on the weekends and at night, get a second job, make money, and save it for Forex trading 4 years from now. 4 years. Sign up. Mental commitment. Sign up. And over the course of 4 years, work your ass off. Right? So I do 20 or 30 hours a week of Harvard stuff. So for 20 or 30 hours a week, work extra. And you're like, Wayne, that's a lot of time and a lot of hard work. Yeah, don't I know it? Cool. 4 years from now, you'll be a better trader. You'll have 4 years of experience. You can trade a demo account and get really, really good. And then 4 years from now, when you're a confident, experienced trader and somewhat educated trader, then you take the money you've been saving for 4 years. And by the way, you work your ass off to save that. You're not going to throw it away doing stupid trades. So you're going to protect it and nurse it like a child. And that's the attitude you need. You need to protect that child. So you put that in an account and you start trading. Now you have a shot at making money. And let me ask you this while you ponder this, because you probably think I'm joking, right? 95% of people would ignore me on this. 95% of people fail at being a Forex trader. So you ask me, are you part of the 95% that would not do it because that would take too long and it's too difficult? Or are you part of the 5% that would say, 4 years is nothing? Right? If you could say, you know what, I can learn this and it's only going to take me 4 years. I don't have to spend any money up front and I can save and work so I can fund my business plan. You know what I mean? No, but Romain, he doesn't have any money. So, whatever. And, you know, it's something like I've always, you know, everyone's different, of course, right? So, like, when you say, like, demos don't work, you should open up a small micro account and trade that, like, that's going to make a difference. And I guess for some people it is. I mean, I've heard that for 20 years. And I'm not that way. right? I'm not that way. So a demo would be enough for me. But I'm pretty hardcore. So I take everything seriously. Yeah. Yeah. PS and Kevin and yes. Yeah. Oh, Pietro's going to join the swing trading group? Right on, brother. Cool. Well, Raymond, that psychologically that means nothing to me, right? So whether I'm trading a demo account or trading, 10 cents, doesn't mean. But I'm not saying you're wrong. I'm just saying everyone's different, and I've heard that a million times. So that's really true for a lot of people. Okay, that's fine. I find though, and I don't like speaking in general terms. In the past, Simpleton was talking very generically or generally, and I didn't like it. So now here's my turn to talk generally. Generally speaking, okay. Generally speaking, when I've come across that argument of a demo account, you can't learn on a demo account. You can only learn on a live account. So then they put in $50 or something into a live account. Okay, that's fine. Go ahead and do that. But generally speaking, when I've run into people that say that, they're not even practicing properly. They're not becoming better traders. They're just trading. And the logic there is if you trade a lot, you will become a better trader. And that if you don't sweat bullets over the real money, then you'll never learn. You can go to the driving range every day, and you can go golfing every other day for 30 years and not become significantly better of a golfer. So I've never subscribed to the school of thought that trading a lot will make you a better trader. And that when you do trade, it has to be real money. I'm not sure if I've actually even seen that work, to be honest with you. I've coached, well, indirectly I've coached tens of thousands of people. I've reviewed hundreds of professional traders' track history. I've coached and mentored hundreds of people directly. I don't think I've ever seen it work where someone just opened up a small account and traded trade, and actually became successful. So what I recommended 15 years ago was that you practice. You don't trade, you practice. Okay? And that's where the demo comes in. Because you're specifically practicing. You're not trading. You're specifically practicing. And of course, I wrote a whole book on the subject, so I don't need to go into it. But at the end of the week, you've reviewed all the trades you actually did. You reanalyze them. Write down notes. What did you do correctly? What did you do incorrectly? What were your strengths and weaknesses that previous week? And then going into this new week, you write down one specific thing you want to work on. Maybe it's entries using stochastics on a 5-minute chart. Very, very, very specifically. And so this week, or you might take 20 or 30 trades over the course of 5 days, and they're all going to be all your tactical entries, not your strategies. All your tactical entries are going to be you. If you're a buyer, you're buying at support on a 5-minute chart using stochastics. And you do it that 20 or 30 times, and at the end of the week, analyze how you did, give yourself, analyze your strengths and weaknesses and all that kind of stuff. And you do that for weeks and weeks and months and maybe years. All you do is that stochastics on a 5-minute chart for your entries. At some point, whether it takes you weeks or months or years, at some point, you will become a master at entering a trade properly at support or resistance using a stochastic oscillator on a 5-minute chart. If you've done that for years and you still haven't mastered it, maybe you should try something else, right? And you say, well, Wayne, that's ridiculous. I say, oh, well, I'm ridiculous. I'm a very ridiculous person. So one day I decided I want to learn how to trade the 1-minute chart. So I traded the 1-minute chart every day for a year. Yeah. And I've been that ridiculous for a very, 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 very long time. And it's usually brought me success. I hate being normal. The worst thing you could do, the worst insult you could probably give me is saying, Wayne, you're pretty normal. You're quite average. I'd have to punch you in the mouth. I apologize. I say, I'm sorry, ma'am, but you should not call me normal. So I'm ridiculous. So I'll tell you a story. Like one of my first companies, I just hired my first employee, and I was really nice to my employee. I loved my employee, and I took care of my employee like my baby, right? I'm like, hey, let's go to Starbucks. So we zip across, we're at the Starbucks, and I always mentored my employees and stuff, so we had these long conversations, and I'm babbling on about something while we're in line. And this person in front of me ordered a soy latte. I'm like, oh my God, I had to stop my conversation. I'm like, and I talked to the guy that just ordered. I'm like, my God, you ordered a soy latte? And he's like, yeah. I'm like, how do they make coffee out of soy? I'm telling you, right? And this is back before, I'm telling you, even finding the Starbucks was difficult, right? Now, even then, the Starbucks sucked, but whatever. So we're at the Starbucks. Anyways, I'm so amazed. How do they make coffee out of soy? So I asked him, how do they make coffee out of soy? He's like, no. They use soy milk instead of cow milk. I'm like, oh, that makes so much more sense. I'm like, hey, is it any good? And he's like, well, it's just different. It just tastes different. Takes a bit of getting used to. You need to try it for a while before you make a decision. So anyways, I walk up there. I ordered a soy latte. And I turned to my employee. Actually, the funny thing is he's about a foot taller than me. And I said, I'm going to drink soy lattes every day for a year. And then I'm going to decide whether I like them or not. Okay? Right? Kevin, if you see spammers and scammers and all that kind of stuff, just red flag them. I think you can do that. Okay? So anyways, yeah, I'm that ridiculous where if I wanted to get really good at trading the stochastics, I'm going to trade it maybe 1,000 times on that one time frame until I become an expert at it. And then I would find the next thing. And I'd do that 1,000 times until I became an expert. And then I'd find the next thing. You know what? 4 or 5 years later, you're going to be an expert at a lot of different things, or at least enough things to be successful at. Do you need real money? No, because you're not trading. You're practicing and you're developing skills. Okay? And then once you got mad skills, put money on the table. That's when you do it. But trading and trading and trading and trading, just trading. And like, I know you're trading a lot and you're trying to become profitable and you're like, well, once I can consistently become profitable, then I'll be a success. But the thing is, you're not you in general, like everybody is at some point so inconsistent with how they trade that there's no logical, intelligent way. There's not even a mathematical way for you to become consistent when you yourself are inconsistent in a market that is inconsistent, right? We know the Forex market is inconsistent. The trading and the trends are always changing and doing this, and there's volatility in news, and then you change the time frame, and there's something else going on, and right, there's the known unknowns and the unknown unknowns and all this kind of stuff. And then you're doing like you're doing like 3 different types of trading strategies, and you're scalping, and you're spotting, and you're swinging, and trading, and Elliott wave and pivot points and something else and something else, something else, and you expect consistent results. It's just not going to happen. Just not going to happen. So you need to really learn how to become consistent, right? And you need to be able to be an expert. Imagine yourself like, as a professional trader, you're offering your professional skills for hire. People hire you because you're an expert. Like they hire a plumber. Like they hire an electrician. Right? You hire gardeners not because they have better skills than you, although one might be an arborist, but they generally have tools that are better than your tools. So you're like, oh, I'll hire a gardener, I'll hire a plumber, I'll hire an electrician, right? And rich people hire money managers, right? Money managers think they're God's gift to the world, but to a rich person, they're like gardeners and plumbers and stuff. Okay? So you need to be an expert, right? It's not like you become an electrician because you hang out at construction sites a lot. Okay? Sometimes you use hammers and sometimes you use skill saws and like, dude, no. That has nothing to do with being an electrician, right? So you become an expert at something. Like, what's the one thing you can become an expert at? How about buying and selling at support or resistance on a 5-minute chart with a stochastic oscillator with the settings 2155.8. No, sorry, 853. Sorry, with the settings 853. And you do that at least 1,000 times. And you're like, well, Wayne, I only do 20 trades a week. Okay, cool. That's 4 trades a day. That's great. So let's average it 100 months. So yeah, at the end of a year, you will be an expert. Like a year? Yeah, just a year. Or why don't you trade more? Do 10 trades a day. It's going to take more time because you don't want to do 10 stupid trades a day, but just do it. Right? Yeah, well, yeah, P.S. I recommend you never touch your money, your trading account. You need to grow it and 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 have a second job to support your Forex, not the other way around. Now, there's a different mentality. So lots of like young men get attracted to Forex, and generally less educated young men. So they're looking for a way out of their situation. They're looking for a quick, easy buck, maybe. It's a thrilling business to be in. But what if you're, not a young man trying to buy a yellow Lamborghini, right? Turn 50 bucks into a yellow Lamborghini. Now, first of all, it's such a silly thought, right? But what if, for example, you're part-time, you're a mom with a part-time job? Oh, the flexibility of having Forex is such a great thing. What if you're a retired person Oh my gosh, what an amazing thing to be able to do. And you know, a lot of old men I've met, they don't sleep well at night, which is like perfect, right? Right? You can be up at night, you could watch the markets, you could have CNBC going in the background, you could spend 2-3 hours reading articles and reading news and reading central banking policy stuff, and then, oh, look, you got a trade coming up. You know, London's going to open soon, so you start skippy scalping in the direction of your prevailing trend. And what a great retirement income. Especially, you don't need employees, no accounts receivable, no account payable. You don't need it's not like you're opening up a Dunkin' Donuts or I don't know what retired people. Oh, Froyo, frozen yogurt. Oh, how many idiots have opened up a frozen yogurt place, right? So very, 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 very cool stuff. And those are the guys that tend to make it, I think, that going into this, you have a very specific reason, like flexible schedule or retirement income, but you treat this like a business. You treat it seriously. And you're willing to put in the time and the effort, right? You're not looking to cut corners. You're not looking to do this quickly. I've talked in the past about, how do you become a master in Aikido or karate? You want to bang out the belts quick? How do I get the next belt? How do I get the next belt? I want to be a black belt, sir. I want to be a black belt. How can I do this faster? Hey, if I pay more money, can I get there faster? What if I just get I want to become a master. Holy crap. Just the attitude prevents you from ever becoming a master. A master is someone that is in the gym and they're not even required to be in the gym. And they're standing in front of the mirror. And they're just, right? And you're sitting there and you enjoy the smell of the mats and the feel of the punching bag or just the motions, going through the motions, the practice for perfection. You just enjoy your art. And there's no rush to get to the next level. There's no rush to get more. You just enjoy being a Forex trader. Right? And when you take it serious and you take it as a long-term kind of point of view, and you keep your focus on like the reality of it, and there's no dream of yellow Lamborghini, right? Like that's not real. So when you have something more tangible, like you have to take care of a child, or this is your retirement income, this is your nest egg, you work your whole entire life. And now this is what you've got left. And if you run out of this money, you starve in the streets like a starving street person. Right? But it's not even willing to work. It just is. It becomes something. You just be a Forex trader. That's good enough. But you do need to master something. You do need to take this seriously. Trading and 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 trading is going to get you inconsistent results because you're a master of nothing. And this idea that you don't have to put the time in to truly understand the math behind your indicators, like I'm actually doing that now. But I've actually done that in the past. I know what MACD does. I know what stochastics does. And it's very, very helpful to me. Right? Like that kind of stuff. The idea that you don't need to understand fundamentals. You don't need to know macroeconomics. You don't need to know microeconomics. You don't need to know central banking policy. You don't need to know how the Fed manages its balance sheet and monetary policy, blah, blah, blah. All you need is price. That's all you need is price action. How ridiculous does that sound? So you should master everything and understand it might take you 30 or 40 years. You might not have enough time left in your life. So you might as well just enjoy the process of learning. You should really enjoy, like, I don't know, maybe there's some, like I said, I'm abnormal. So I get sort of addicted where I got to get 2 more stochastic crosses before I go to bed, or 2 more Stokes crosses before I smoke a cigar, and then while I'm smoking a cigar, look for the next stochastic cross. Before I can't eat until I get another stochastic cross, or my alarm goes off, ding 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 ding, Asia open, run to the chart, see if I can get 1 or 2 Stoke crosses. Ding, 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 3 o'clock in the morning. I've had my cell phone taped to my arm. Wake up like, oh my God, ding, 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 ding. I used to have a headlamp. So I'd go to the closet and I put on a headlamp and I put on my, a robe or something, and I walk through the house and I get to my desk and I do, in the middle of the night, do a couple of trades. I didn't want to turn the lights on and get all too wide-eyed and stuff. So I'd sit down at my chart and I'd do this. I remember this. Oh, and I'd get down and I already knew what I wanted to do. I'd already done my analysis. I already knew I wanted to sell the pound yen. Now that London's open, I'd walk to my chart. I'd look at it. Is there going to be a trade? Yeah, it looks like there might be a trade over the next hour. So I get in there and I drop in, and maybe I can get a Stokes cross. Or I wake up and I go to the chart and I look at it and my eyes are all blurry and I'm like, no, that ain't going to happen. And then I'm like, go back to bed. Wake up in the morning, set it up pre-London or pre-New York. And you just do this. And I become ridiculous, becoming a master of trading that stochastics, or trading the MACD, or trading the 1-minute chart, or the 3-minute chart, or the 5-minute chart. We're lining up the 5A cross on the 15-minute with the 5A cross on the 4-hour, and then measuring against the 5A cross on the 15 versus the 21.55 on the 4-hour. Or kicking off 21s. Where's the next 21? Where's the next 21? How am I going to catch it? When is it going to be? Oh, it's going to be in 2 more hours. It'll probably come back. And just absolutely ridiculous at focusing on the one thing until I've absolutely mastered it and then find my next thing. Imagine a trader that's done that for years. Imagine that. Maybe it's you, right? Maybe you've done that for years. Or maybe you want to do that for years. Imagine how good of a trader you will be if you've mastered 7 or 8 or 9 different things. Things like 1, 2, 3 patterns. You know when you spot a 1, 2, 3 pattern, you have a 78% chance of making money. And you've done it 1,000 times, you know how to do it. You're really, really phenomenal at trading 1, 2, 3 patterns. And you'd be shocked if you didn't make money. Are you there yet? Maybe not. Do you believe you could if all you did for a year was trade 1, 2, 3 reversal patterns? At first you might be mediocre, but because they're reliable patterns, you probably make money. And then by month 2, you'll be a lot better. By month 3, you'll be a lot better. By month 4, you'll be quite good. Month 5, quite good. Month 6, maybe it becomes a slow market and your results are not as good, but now you start identifying how they work in a consolidating market or in a slow market versus a fast market. And now you're getting that experience and all that kind of stuff. But by the end of a year, oh my gosh, you will be so good at trading 1, 2, 3 reversal patterns. Whether they're inverse or not, whether it's a trending market or a consolidating market, whether there's high volatility or low volatility, high volume, low volume, whether there is a change in central banking policy, whether there's geopolitical risk or whatever, you've done it through every market condition there is, and it's second nature to you. And then what do you do in your second year, guys? Find something new to master. Can you imagine? I hope you go there. I hope you take my advice and go there. Trading like it's a video game is not getting you anywhere except poverty, really, most likely. Okay? You're not going to get lucky. If you do this for years, you don't get lucky. What happens is you become part of an aggregate. Everything begins to average out. If you survive, there's no luck. You'll just fall into average, and maybe that's profitable, maybe it's not. If you find something worse, and that's where you're not average, you're going to have some really big winners, but you're going to have very big losers as well. And we all know it's easier to lose money and make money, so eventually you'll just bleed out. You'll just bleed out. Everything will be skewed to the right. Your average will be below profit. And you'll just bleed out. You'll bleed out. Whether it takes you 3 months or 3 years, it doesn't matter. You just bleed out. You'll run out of money. That's all. You'll just bleed out. You won't have a profitable business. If you're looking at it from a microeconomic view, your marginal product, the cost of your marginal product is higher than your marginal revenue. So you might slowly run out of money, but you will run out of money. Every time you pull the trigger, on average, you lose. So anyways, become a master. Don't treat it like a video game. Trade. Master, and enjoy it. Enjoy it. Enjoy reading the newspapers. Enjoy listening to news. Enjoy talking to people out in the real world about how's the economy doing. Hey, man, how's business? You selling cars? Hey, man, how's the Uber business? Hey, how's it going? Is the hotel booked? Are you guys packed? Doing big conferences? I talk to everybody. Everybody feeds me with information, and I turn those into trades. Okay. So I'll see you guys tomorrow. Happy Tuesday to you. I think it's Tuesday. Honestly, I don't even know what day it is. Yeah, Tuesday. Happy Tuesday to you. Maybe some of these are breaking out. Okay. These are good signs. And we had talked about this, I think it was Sunday we talked about this. If we can get through here, that's a pretty big sign. This is a bearish entry on the right. This is a bullish exit. Bull X bear entry. Okay. We just didn't know if bulls would buy it back down here. Looks like they have not. Now, the next part of this, and I'll let you do this on your own, is there congruency on all the yen pairs to do something similar? I don't know. Look for the congruency. See if it's the birth of a new trend. Okay? So peace on earth. May the pips be with you. May our profits be above average. Thank you for being on my team and all that kind of stuff. And if I was bitchy today, and I felt like I was bitchy at times, I apologize. I don't know. Overworked, tired, cranky, bitchy. Sorry, I don't mean to be. Okay, so thank you. Remember to get my chart templates. The link is below. And if these webinars are helpful to you, make sure you show that your thankfulness and your gratitude to Traders Way by First by opening a demo account and eventually by opening a live account when you're ready to trade real money. That might be 4 years from now. We'll wait for your success. Okay? We'll wait for your success.